Our next speaker is Tim Carstens, Managing Director, Base Resources. Shall we please welcome Tim to the stage?
Thank you very much, and good morning, everyone. So today's a bit of a bittersweet day for me, I guess. This is the 15th time I've had the absolute privilege of presenting BASE to this audience, and it's the last time I'll be presenting BASE to this audience as an independent company, most likely. Yesterday, our shareholders voted in favour of a combination with a company out of the US called Energy Fuels, which I'll explain to you now. So we're on a track to a merger really by the first week of October. It won't be the last time you see us here because BASE will continue to exist, but we won't be the independent company that we've been up to this point. So why have we gone down this path? There's a whole stack of reasons for it, but ultimately there was a pretty compelling premium that was put on the table that was hard to ignore and hard to not put in front of shareholders. We saw that there was a real opportunity to ease the path for the development of Toliara. It's a big, challenging project to develop, coming off a small base. We were going to need to raise a significant amount of equity. By going down this path of a merger with a much larger entity, we have easier access to capital. It's less dilutive to the existing shareholders because obviously while we are selling out a significant interest in Toliara, we're picking up a significant interest in a whole stack of other assets. It enables us to take more advantage of the downstream processing opportunities around the rare earths with Energy Fuels' White Mesa Mill. So there's a whole series of reasons, but one of the other key aspects to this, and I'll explain this more in a minute, is the combination presents a really interesting strategic development path for the combined business with commodity diversification, asset diversification, and a whole series of growth opportunities in different commodities where, because we will have diversity, we can pursue opportunities counter-cyclically in any one of those. One of the challenges we've had as BASE since we started has really been trying to capture those opportunities when you are just operating in one commodity, in our case mineral sands. When the opportunities present, because cycles were down, you're also in a position where you don't really have the currency to proceed with some of these acquisitions. So we see this as a real opportunity to develop a really unique critical minerals business with a pretty interesting risk profile. Quick dive into Energy Fuels. As I said, they're much bigger than us. They're listed in Canada and New York. At the moment, they've got a market cap of about 720 million. Over the last number of months before everything started to slide, they're up well over $1 billion US. They have a significant cash position. They have no debt. Great position to be able to finance progression of various assets that we'll be bringing into the portfolio. What makes the whole strategy work, though, is their flagship asset, which is their White Mesa Mill in Utah in the United States. It's the only operating conventional uranium mill in the US, but it's also demonstrated the ability to process rare earths at that site. It's got a very handy licensing framework. It's also got a very large real estate area and in quite an isolated part of Utah. So the opportunity to take a step sideways into rare earth processing at that facility represents a really unique entry into rare earths when you compare it to a lot of other players who are trying to get in for the first time. They have the licensing to produce up to 8 million pounds of uranium a year. At the moment, they're ramping their operations back up. They've been in hibernation, like most of the uranium industry, for quite a while. They're heading towards a run rate of 1.1 to 1.4 million pounds by the end of the year. And they do have quite a number of uranium assets, which I'll show you in a sec, in fact, right now. So that's the asset suite when you put the companies together. You can see us in the red. We will continue as Base Resources looking after what we currently look after, but we'll also be picking up management of their Bahia project in Brazil and what's hopefully going to crystallise into a 49% interest in the Donald project in Victoria as monazite mineral sand co-deposits. While the Energy Fuels team based out of Denver continues to manage all of the uranium assets and processing. They have 2 uranium assets that are currently in production, and they've got another one on standby, which is an ISR project that they put on ice a number of years ago, and looking to ramp that back up when the market calls it forward. So they're in rebuild mode at the moment, but with a significant equity markets position. So the overall strategy here is to develop a diversified energy transition business where we're entering rare earths by a logical sidestep from the assets we already have. For us, and those of you who have been following us would know that Toliara in Madagascar was a mineral sand asset purely until we realised the value of the monazite, and I'll talk more about that in a minute. So for us, Toliara is going ahead as a mineral sand project, irrespective of what's happening in the rare earth markets. For Energy Fuels, their White Mesa Mill exists and will continue to be underwritten by uranium, but there's an opportunity to expand that into sort of a duplicated capacity to produce rare earths. So for them, it's not a new process. They've demonstrated that they can use that mill to achieve the outcome. And so we're not doing anything for the first time or having anything that's purely being justified on the basis of what's happening in the rare earth space. And if you've taken the time to listen to what Tom O'Leary from Iluka has been saying about the manipulation of price components in that rare earth value chain, for us as an integrated player where we don't need to justify it on any particular component, we're in a really advantaged position to get up and get going at scale in rare earths and be doing it in the United States, where there's a real strategic imperative to develop that supply chain. And we have directions for growth all over the place. You know, we can continue to add mineral sand and monazite supply assets. We can expand in uranium. We can head further downstream in rare earths, moving closer to the EV production, so heading into metals and magnets and what have you. So creates a really interesting growth and strategic profile. So the sad part of today, apart from losing our independence, is that Kwale is coming to a close. It's rather disturbing how fast this has come around. I still remember very clearly my first presentation to this forum in 2010 after we'd just acquired the Kwale project and talking excitedly about what was to come. And here we are 15 years later and we're heading towards closing it down. We've run out of ore, fundamentally. We've explored the region around us. We haven't been able to identify any volumes or grades that justify keeping the operation going. And so we'll be heading to operational closure in December 2024. So we've been working on the closure plan for Kwale for a long time. In fact, we had closure in mind in many respects when we started the project, when we were in design. You know, we've had a mantra of if all we leave is a memory of how good it used to be, then we've failed. So it's factored into all of the ways we've thought about environmental management, community development and the like, and in the way we've set our people up to transition to a life after base. So one of the things we're very focused on at the moment is looking at what post-mining land use options there are. We've done a lot of studies to look at the viability of them, but at the end of the day, it's a decision of the Kenyan state as to quite what the land gets used for, and that's something that Waziri will be very heavily involved in over the coming 12 months. What I thought I might do, though, is just sort of a bit of a retrospective. I mean, most of the presentations I've done here, I've stood up before and told you what we've done in the last 12 months around some of these things, but thought it'd be worth capturing it all together as we head towards close. So in the full operational life of Kwale, we've worked 42 odd million man hours and we've had 2 lost time injuries in the history of the operation. It's a remarkable safety performance, particularly when you consider that we're almost 70% of the Kenyan mining industry. So we had to train everybody in our sort of safety approach from the very beginning. 74% of all of the Kwale operations purchases, all of the inputs, have come from Kenyan suppliers. So it's the best part of $500 million US over the last decade or so. We've delivered over 800,000 training hours to our people. Now, with a workforce of about 1,000, you can see what sort of training investment that's been in our people. We have guys and girls who are leaving the base organisation as some of the most capable and qualified mining people you will find anywhere in the world. If I was going to start up a mining operation in Australia and I had complete freedom of choice as to who I brought to start that operation, without hesitation, I'd bring the whole Kwale team. 99% Kenyan employment. It's a remarkable achievement that we now run that whole operation with about 12 expatriates. We've done a lot to bring that number down and bring up the local replacements. We've invested nearly $40 million in community development, and that's been very much focused immediately around us. We've been quite careful not to spread our influence too far, so it's really only been in Kwale County, but it's a very significant amount of money over time. And we've paid to the government of Kenya over $400 million US in royalties, taxes and various other contributions along the way. So it's been quite a significant economic engine for Kenya, particularly being a deposit that was always seen as being too small to justify development for a long period of time because it had such a short mine life. It did require the government to provide some incentives to get the project moving, but the payback has been massive. Obviously, rehabilitation is a very big part of our focus at the moment. That photo is over a year old now. If I took I've got one, but it doesn't present all that well, an aerial photo of the South Dune where we've just finished mining at the start of the year, you would be hard-pressed to work out where mining actually took place. By the time we leave, this will look very much like it looked when we first came in. The trees might not be quite as old as some of the ones that were there before, but everything grows extremely quickly. So we're planning to have all of our mined areas profiled, planted, and really then in sort of growth maintenance mode by the end of this financial year, so 30 June this year. Which then leaves us with Toliara, and it is still a remarkable project. From our perspective, it's what the focus of our combination has been about. We've previously been talking exclusively about Toliara as a mineral sands project, very robust project, 38-year mine life on the basis of less than half of the ore body as we currently understand it. There's lots of expansion potential, but even just at that scale, it's a very significant NPV. And then we realised over time that there was a huge amount of value in the monazite. So operating at the scale we're looking to operate, we'll be able to produce anywhere between 22 and 26,000 tonnes of monazite a year. And that's really the link into the White Mesa Mill in Utah. And because it's effectively a free waste stream out of the mineral sands processing, makes us unbelievably competitive in the production of rare earth oxides. I said it was a very robust project. Actually, I should say we only completed the feasibility study, or technically it's a pre-feasibility study on the monazite stream, and released that in December last year. So it's quite a new thing in that sense. But the NPV on the project is high, really strong IRR as you'd expect. Reasonable capex in stage one. It's a little under $600 million, so it's a big spend. And then there's around $100 million that needs to be spent after that to scale it up in about operating year 4. But it's a very significant operation. We'll peak at about 1.3 million tonnes per annum of ilmenite, rutile and zircon, and as I said, 26,000 tonnes of monazite per annum. And what it all hinges on is this resource. So that's obviously a stylised cross-section, but when I'm talking about 2.6 billion tonnes, it's really only based on the blue and the yellow there. So the upper sandy unit and an intermediate unit. We haven't incorporated any of the lower sandy unit yet, or a whole lot out to the west. So that resource will get bigger, and the reserve that we've built the 38-year mine life off as a starting sort of parameter is only a bit over 900 million tonnes of that. So there's a lot of scale-up potential, a lot of mine life extension potential in this to come. Obviously, Toliara's taken its time to move forward. We've been suspended, if you like, with the government of Madagascar for the best part of 5 years now, while we progressed negotiations on fiscal terms. A number of things have delayed that reasonably significantly. COVID certainly didn't help, and the other thing that needed to happen was Madagascar getting some external advice from the World Bank and the IMF on what made sense as far as fiscal terms and mining code. Now, obviously, as we heard from the Minister on Wednesday, the new mining code is in place. We've reached in principle agreement on our fiscal terms, and we feel like we're right on the cusp now of moving forward very soon. So on the basis of agreement of fiscal terms this month and lifting of the suspension, we've got about 14 months of work to do to get to a final investment decision, so late 2025. And then there's about 28 months of construction and operationalisation to get to waving goodbye to our first ship. So we'd expect to see that happen on that timeline around about January 2028. So still a while to go. It's a big project. It will take time, but we feel like we're well and truly ready to jump out of the starting gate now. So with that, thank you very much. Thanks everyone for the interest and support that people have shown in Base over the last 15 years, and I hope you'll continue to watch the journey of Base as a part of a bigger beast that's got a pretty interesting future in front of it. So thank you very much.